The name's Hong Jensen Hong, and it doesn't matter that we're starting the next industrial revolution. The juggernaut earnings could not pump the market for long. The extreme fear and greed index being largely ripped down by the likes of people of Michael Burry, claiming capex spending is so exuberated that it's not actualizing it into any real return in the near term, leading to bubble-like territory. And that has been the conversation for eons now, as NVIDIA continues to prove that we're not slowing down on this infrastructure spend. I mean, like the Super Bowl, we were glued to our screens last night watching these absolutely like world-setting growth rates in a mega cap company, unlike anything we've ever seen before. And it did literally recover the entire market until about the afternoon here on Thursday, with some quotes saying SPY is experiencing significant volatility, prompting discussions about a potential market correction or even the start of a bear market. The Fed Governor Lisa Cook's comments regarding high valuations are being cited as possible catalysts for the downturn. NVIDIA, despite strong earnings, NVIDIA is trending down, sparking debate about an AI bubble. The community is actively discussing whether the drop is a market correction, profit taking, or manipulation by institutional investors. Some also point comments from a Fed official raising concerns about valuations as a contributing factor, guys. And I want to break this down a little bit more in depthly, talk about the stocks I've been buying this week, and just get a bit of a perspective. So if you're on a path to financial independence, if you'd like to retire late, jump on the journey, hit the subscribe button, because look at this pump followed by the very quick to dump. And NVIDIA isn't a stock that I'm personally playing because it is part of this circle jerk reality, as we call it. NVIDIA invests in companies. Those companies take the investments from NVIDIA. They buy the NVIDIA chips. You've got a handful of companies like Google and Microsoft controlling like 50% of NVIDIA's revenue, just endlessly throwing ungodly amounts of billions of dollars. And those are capital, that we're giving to Microsoft and Google and Facebook. Like, we're giving them that money, and then they're taking those earnings and just giving it to NVIDIA. And then NVIDIA is posting those earnings as revenue and earnings, even though it's not really coming from the broader market or software expansion from AI, right? So this is the reality, the fundamentals of NVIDIA. And I'm here to tell you it is and it is not a bubble. Like, there's two kind of notions to it. And I know a lot of you said, hey Kyle, you kept saying it was an AI bubble. You said it's going to come to an end, and it is. There's major cyclicality to NVIDIA's business model, unfortunately. I mean, it's like selling picks to the miners during the gold rush. Eventually the gold rush ends. There's not a lot more picks to be sold to the miners. Things go back to a more nominal pace of supply and demand. And eventually that's going to happen with chips. Like, eventually Google, Meta, and all these companies are going to be saying, okay, we've spent enough. We built the data centers. We're going to slow down a little bit. Maybe we'll see what your next generation is. But we're obviously not going to replace a data center tomorrow, right? Once this thing is built. So it's very likely there is going to be some kind of incredible drop off in this net income growth that hit 32 billion almost for this last quarter. Comparably, just to put that in perspective, and I want to remind you that is a 21% quarter over quarter. Like, this is unheard of. Like, this would have been unimaginable 5 years ago in a company of this scale, or even a year ago for that matter, 2 years ago, until NVIDIA really started to take off at the scale it has, right? I mean, take a look at this, because Apple's net income, 27 billion. So they're well above Apple's level of net income. And if you even compare it to Google, which should be technically the largest company in the world if we're doing it by net income, did about 35 billion. And it wouldn't be surprising if NVIDIA come next quarter surpasses the likes of Google's net income. And we'll see. I mean, you have to expect it, right? Because if you look at the data center highlights, this is like just ungodly. I mean, basically they announced a strategic partnership with OpenAI to deploy 10 gigawatts of NVIDIA systems for OpenAI's next generation AI infrastructure. They partnered with industry leaders including Google Cloud, Microsoft, Oracle, and xAI to build America's AI infrastructure with hundreds of thousands of NVIDIA GPUs. They announced the first time Anthropic will run and scale on NVIDIA infrastructure, initially adopting 1 gigawatt of compute capacity with NVIDIA's Grace Blackwell and Vera Rubin systems. Can I go on? Because it keeps going on. Reveal plans to accelerate 7 new supercomputers, including Oracle, to build the U.S. Department of Energy's largest AI supercomputer, Solstice, featuring 100,000 NVIDIA Blackwell GPUs, plus another system, Equinox, featuring 10,000 NVIDIA Blackwell GPUs. This goes on and on and on. I mean, like, we're in the middle of this super cycle, in my opinion. Like, I don't think we're at the end of the inning yet. And though, yes, it is hyper inflated, you have to recognize there's still an incredible amount of opportunity. And we're seeing AI like operate in reality. I mean, obviously OpenAI is burning through capital like crazy. The likelihood of them being profitable or even being the leader in the future, in my idea, is slim to an extent, just because Google and Meta have so much capital from foundational businesses backing them. They're the stocks that I would rather focus on. Because like I said, I'm going to get my exposure through NVIDIA, through the S&P. I want to be part of this cycle. And when it comes to an end, there are going to be companies that will replace NVIDIA. It's going to lead to excessive volatility, but I still believe we're in a massive growth phase of margin expansion. And I think companies like Meta and Google, Apple, they'll be the end the benefactors to what they're investing in with NVIDIA, right? And they have fundamental businesses backing them. So even if it doesn't work to the extent people want it to, they're going to be fine regardless, right? NVIDIA, the chip companies, the pure AI plays like OpenAI that trade at ridiculous valuations. Good thing it's a private company, it's not publicly traded, so we're not going to really feel the effect on the S&P in that aspect. But you have to recognize that, you know, it's going to go through the cyclical periods, but there are opportunities out there, and the ones that are going to survive, that own the software, are going to absolutely crush. So as many of you know, I've been accumulating Meta. I feel like the two companies I love the most keep going through like ebb and flow between them, because buying Google, man, at a 17 PE, it was insane. I mean, we're up close to 70% on the, well, we were up 70% on the position this morning before it corrected, and it did briefly surpass Microsoft's market cap, but I couldn't help myself, right? Like, we played the Google game, we made some capital, we're going along the rest of the shares, but now Meta is the next play, right? Because if we just take a look, Meta's PE history, it's typically around a 30, can trade 25 to 30. And right now we're trading at like a 20 what? I mean, we're down to a 26 to 25 PE right now, you know, back into the 500s after just peaking the sixes again. And I'm just like, guys, like, this company is growing faster than most of the mega cap tech companies, even Tesla. Like, it deserves at least a 30 to 40 PE. And yet here we are after a one-time expense for taxes and, again, concerns around CapEx spending. There's no reason for the stock to be trading at the level it's trading at, right? And Google now trading at a 30 times multiple is the highest level it's traded at since the pandemic. I mean, it's been 5 years since we've seen this level of valuation in Google. And it's crazy how within just 6 months we went from those lows to these new highs, right? So, you know, I can't really buy too much Meta here. I'm fairly disciplined and trying not to make these any more than right now. I think Google and Meta comprise about 15% of my fiance and I's combined account. Typically can trade between 15 and 20%. If it starts going above that, we tend to trim it a little bit. But obviously with the stocks compressing, it makes it a lot easier to buy, because I mean, our total exposure is slowly de-weighting away. But in the meantime, like I said, I'm going to continue to buy the S&P, and I hope it dips materially into the end of the year, because it's been doing quite exceptionally well. I mean, 12% on the year, you know, it's not as good as our VDI, or ticker VDY, which by the way was tapping all-time highs today before kind of correcting. So it is giving up a lot of the gains we experienced. But regardless, I mean, it's neat seeing these two stocks kind of play together, because it's removed so much of the volatility that has been going on, and it has excelled outsized returns. Because I mean, VDY was up 25% with the dividend this year. Insane, right? And now we're starting to see the cyclicalities go on, because as mentioned, oil has started to recover a bit here. Today, we're seeing a bit of a correction in oil, but oil is still one of the leading, sectors this week. If we zoom out on the week here and just take a look, and I zoom my head out, you can see everything's almost red in the Canadian economy, with the exception of what's going on with, energy, minerals, and all your oil stocks. And we're starting to see a little bit of a correction in the gold stocks, which it could open up another window of opportunity, right? Gold has been fluttering around this $4,000 price mark, but if it sustains here, I mean, the forward valuations on these precious metal companies are going to still be absolutely incredible. Like the forward earnings are just going to be nuts. So it really comes down to what the commodity prices are doing. The demand for these commodities, something tells me they're going to remain high regardless, because we still need them for the infrastructure build out that is currently going on in the market cycle. But yeah, I mean, what a volatile day in the market. And I think it's just the end of the year volatility, to be fair. I think when the markets tank, people want to point to it's this or that, just the same reason when it's pumping, they want to point to this or that. I don't get excited when the markets are flying high, as many of you know. I've been more focused toward paying the mortgage down. But when I see opportunity like we did with Google, we went crazy. Meta's that next opportunity. I would like to bet the farm on it. Should have bet the farm on Google, but I just can't take on that kind of risk, because you just never know what happens. And it's not uncommon for these stocks to go through massive correctional periods. I mean, like I said, I think right now people are just speculating, and it's the end of the year, and the valuations are coming down. It's great seeing earnings go up, valuations come down. I personally don't think we're in like a massive bubble. I think it's a secular bubble, hyper fixated on more of the private AI companies like Palantir as an example. But regardless, I don't think the broader S&P, with the exception of NVIDIA, is in like a crazy huge bubble. I think it's valued. I think it's expensive, but it is growing at an exceptional rate. But you just got to be careful, right? Because at the drop of a dime, just like coming out of the pandemic with the inflationary cycle, we could really quickly see things change in the market. And I mean, it's not uncommon for companies like Meta to drop 70%. And this is a very foundational mega cap tech company, guys. So you just always have to be aware of that when you are investing in markets like this, because they can be very exciting, but they can become very scary. And as we've seen, like, people constantly are adjusting once they get slapped upside the head. We've seen what you've done. You know what you were doing. You know you were getting greedy. And then markets like this happen, and then you question your life and you start selling off those investments that become incredibly volatile. But I'm sitting here pretty comfortable, excited to perhaps pick up some more S&P if we do get a severe enough dip. But typically these dips just don't last long enough. So I'll keep accumulating Meta in the 500s if it continues to dip from here. But you'll have to subscribe to see what I'm doing, how I'm doing. And if you want to join my chat groups, talk with me one-on-one, go to kylelivingston.com. But as always, I'll pass the question off to you. I'd love to know what you think in that comment section below.